And welcome to part 3 of pricing your service. This is brought to you by Market Today. Visit www.markettoday.com. That's MARKIT today.com. Get yourself a fresh, hot new website, one that represents your company well, one that shows your professionalism, one that's going to make you proud, be an asset for your company, and something that is going to get you more conversions when people visit your website. So today we're going to get into service overhead. 45 to 55% of every dollar collected on service goes towards paying the overhead expenses associated with that department. Oh, hang on one second. Let me pause this. Okay, sorry about that interruption. So 55% of every dollar, up to 55%. Typically, it's going to run somewhere around 50%. You know, if you get extremely efficient and extremely efficient technicians and like all this stuff, like that can come down. But I want you, if you're a young company, I want you to consider 50% for your overhead when you're determining your price. So if you've got a $160 gas valve and you want to pay yourself $25 an hour or 35 or 45 or 65, whatever, add that in. So that means your total cost of goods sold is going to be $185 in this example of a $25 per hour technician with a $160 part. If your overhead is 50% and your profit goal is 25%, which I would shoot for in service, nothing less than 25% net profit in service is what we should be shooting for here. If you take 100 minus 75, that equals a 25% divisor. So for this particular service call, you take your cost of goods sold divided by your divisor, which is 25%. That's going to be $740 is what you'd have to charge that customer to walk away with the 25% net profit. Now let's break it down. You can reverse engineer that whole thing. If you take your total invoice minus your cost of goods sold, that's 555 gross profit. This is where what most people think they're earning and walking away with. But consider the possibility that your gross profit is not what you walk away with. It's you haven't paid any of your extra expenses that it took to get that customer. You know, there's a good portion of this is where departmentalization comes in. If you really wanted to get down into the nitty gritty, which is really hard to do, and you're probably not ready for it unless you're doing 5 million or 7 million or 10 million. But you can determine your actual overhead for that each department if you know exactly if you're allocating the time spent in each department. And that's going to be really hard to do when you're talking about the dispatcher, for instance, the person answering the phone. How much of those phone calls are coming in for service versus installation? How much administrative work is being done for service versus installation? It's always going to be higher in service because we do a lot more volume in service. There's way more service calls performed than installs. You know, you can't go out and run 10 installs in one day unless you're doing, I don't know, 30 million, something like that. I mean, you're going to have a huge crew. You're probably going to have 70 employees by the time you're doing that. So it could be really tough to manage that at a small number because you just don't have enough people. You don't have enough administrators to nitpick all this stuff, to break it down. So every hour spent would have to be allocated into a particular bucket on your profit, in your accounting software to determine the overheads for each individual department. Now, there are other programs out there. There's one that I use called Profit Forecaster. It's a ton of work that you may or may not have time for right now. And ultimately, we all come up within our industry they all come up somewhere similar. Some are better than others because they're more efficient. They have more processes. Maybe they have better people or more experienced people. And some are worse than others. So if you just kind of take the average, and just see where you fall. Like, use the numbers and see where you fall at the end of every month when you're reviewing your profit and loss statement. That's going to tell you if you're making money or not. And if you have an idea of what some of these numbers are, then you can make adjustments from there and try to improve different areas. But anyhow, if we take this invoice and just break it down, which you should be breaking down invoices, I would pick 10 invoices a month minimum, and 3 or 4 or 5 installs per month. Break those down and find out where you're coming out at. Find out what the gross profit is after all of your expenses, your cost of goods sold are accounted for, and then keep going from there. If you take the gross profit and you divide it by the selling price, that equals 75% gross profit margin. Margin just means it's a percentage instead of a dollar amount. So then there's the equation for it. Right here's the equation for it. Then we take 75 minus the 50% overhead, and that leaves us with 25% net profit. So 25% of 740 is $185. That's what I actually earned off that service call with that $160 valve and 1 hour of labor at $25 per hour. So that's total invoice times 0.25 equals your net profit dollars. So here's another repair, just another example. You got a $100 part and a $30 an hour tech for 1 hour. That's $130 cost of goods sold. To figure a divisor, take your overhead 50% plus your desired net profit 20% or 15% or 25%. Like I'm going to tell you, I still recommend 25% on service. Now, I will tell you this too, your desired net profit can come down if the cost of the part goes way up. Like if you're doing a $700 compressor replacement, it's going to be a tough sell to maintain 25% net profit or your desired net profit. So you may have to move those margins down, but it's more dollars. So, it's a $2,400 invoice instead of a, $700 invoice. Well, you can still walk away with way more gross profit dollars at a lower margin. So this is how you can adjust that a little bit as the cost of goods sold expands for a service call. And for installations too. It'd be really hard to sell to walk away with 25% net profit on every single installation. Some companies can do it. It depends on your area. It depends on where you're at and what the going rate is. Not that you can't be 2,000 more than the going rate. I'm not saying that. I'm saying that there's still a limit. You can't be 3,000 or 4,000 consistently. Maybe that's a limiting belief I have, but I don't think so. I think you're eventually going to get a more of a negative reputation. You're going to have a lot harder time selling jobs anytime you're competing against somebody else. So for this example, you take 100 minus 70 to determine our divisor. So the 70% is what we figured up that we need to earn a 20% net profit, which includes our overhead. So then you take 130, the cost of goods sold for this example, and you divide it by 30%, which is the divisor. It comes up with a selling price of $433. If you take 433 minus the 130, that gives you your gross profit, $303. Then you take that 303 and divide it by your invoice, and that gives you 70%, which is gross profit margin. 70% gross profit margin minus 50% overhead equals a 20% net profit. So what's the problem, company? If you are not making money, your sales aren't high enough. Well, we may have to sell more to the current customers that we have or bring in new customers. Consistent marketing strategies that target the right people for your product or service is a must for your growth. This is where you might want to check into market today. gradually get better and better organic results from the SEO that they provide. So when people search in your area, you will naturally come up closer to the top or at the top with good SEO. Or pay for it. Pay to get to the top with some Google ads. Market Today can take care of all that stuff for you if you're looking to increase your sales. What's the problem? Problem number 2 could be that you're not collecting money that people owe you. This little graph right here is the average value of accounts receivable as they age. So 0 to 30 days, if you don't collect right on there on the spot, it's automatically worth less than what it was if you would have collected at time of service. After 31 to 60 days, it's worth about 70% of what that total invoice was. So if you invoice somebody for $1,000 and it took them 35 days to pay it, it's only worth to you as a company about 70%. So it's only worth about $700 to you. As this progresses, you get out here to 120 days, it's worth a lot less money to your company. A bird in the hand's worth 2 in the bush. This is kind of that same thought, that same way of, we can't be billing our customers. That's what I'm getting at. Like, you really want to do business with the end user at all times. You're not wanting to do, you want to do, slowly work yourself away from doing third party type services. So for instance, like, these home warranty companies, for instance, they have a reputation for, new contractors. They're wanting to get service because they need customers, because they need money, and they'll go out and they'll sign up with these guys, and then they wind up, before you know it, it's like 70% of their business is coming from the home warranty company. Well, then the home warranty company comes in and says, whoa, wait a minute, you're charging above what we consider average. So you need to charge less money or we're not going to give you any customers. And so they kind of trap them. So it's not something you want to get into. This happens to a lot of people. And they're a third party. They're determining what you can charge for refrigerant. They're determining what they're going to give you the equipment instead of letting you provide the equipment. So all of these type things would be a third party where they're kind of controlling, where you want to deal with the end user. You want to deal only with Mrs. Smith. You want to only deal with Mr. Jones, and not have this third party trying to control what you do or can or can't do in your business because they got you, I mean, what would these people do? And I know some of you guys watching this, this could have happened to you, where you get trapped in this cycle with these, I didn't add any home warranty companies till we were 8 years in business, to give you an idea. And one of them lasted for 1 year, that relationship, and the other one lasted for about 2 years. And I'm done. I'm not going to use a home warranty company ever again. They're a pain in the ass and they're not worth it. So build your own customers, build your own client base, and stop paying these home warranty companies to basically hold you down, because that's what they do. So collect time of service. Stop billing your customers. We're not a bank. Problem number 3, you're not charging enough to cover expenses. With no departmentalization on your income statement, your total revenue, all sales, your service and install minus your cost of goods sold should equal 50% or better. I did a video just on this. So you just can't compete on price. To a certain extent, like when your total revenue minus all your cost of goods sold, and I told you that also includes your wages, technician wages, installer wages, and spiffs and bonuses would go in that too, because that's part of the sale. That's part of the cost of goods sold. You minus all that, your gross profit should be at least 50%. So in this instance, if I've got $750,000 in revenue, my total cost of goods sold is $475,000. That leaves me a gross profit of $275, which is a 30% 36% gross profit margin, which just takes that number and turns it into a percent against the total revenue. So 275 is 36% of 750. That's too low. I could tell right away by looking at that one thing on my profit and loss statement that I need to raise my rates, period. That's probably what it's going to take. Or I need more sales if I just didn't have enough sales come in. It's one of those two things. Most likely, I probably need to raise rates. Problem number 4, you're spending too much money running the business. This could be that you're doing extracurricular stuff with your business money. This happens a lot with small businesses when they start. They think, oh, I just sold a $10,000 job. I can go spend $2,000 on this or that, and it's not going to matter. That is false because you're not including the cost to do business. You're not factoring that in. How much does it cost for your phones, for your internet, for your fuel, for your vehicle expenses, for your printer, all these extra expenses that it takes to just run the company. Like, you're not factoring that stuff in. So sorry about that. Okay. So you got to be aware of what you're paying yourself. Just because your company does 700,000 doesn't mean that you can necessarily walk away with $150,000 in income. Like, you might be paying yourself. I'm just saying you got to keep this stuff in check. Don't overpay yourself, because you're going to strangle the growth of your company. You're going to trap yourself. You're going to be in a trap that you can't escape. That only gets worse the busier and bigger you get. So also, unexpected expenses will always happen, always. So you have to be prepared. You've got to have some type of a stash, some type of money in the bank to cover those expenses when they arise, and they will arise. Also, what you pay attention to, where energy goes. What is that saying? Where attention goes, energy flows. So I want you to pay attention to your bank account. Be sure you know where the money's going and why. Look at that at least once a week, to your business bank account. Look at that stuff, because it's going to help you ensure that the profit and loss statement is right. Like, or is what they're showing even close, to the amount of money? Did you deposit the same amount of money that it's showing for the month? So just watch that stuff, guys. So how much should a repair cost? Well, there's a homeguide.com. It's a site for homeowners, and I just picked this off the website, but a repair, service, and maintenance, they're saying $100 and $150 per hour. Well, I'm going to tell you right now, that's too low. That's going to be like bankrupting your business, creating all, the very first part of this series, talking about the pain that it creates when you're not in fair exchange. So, but overall, they say over here, the national average cost is $293 for a repair or maintenance. Probably maintenance and service, or repair and service primarily. So that's going to give you an idea. What is your average invoice? Because I want to tell you, you don't want to be the national average, because the national average HVAC companies report, not saying that they don't make more, they're just, but what they're reporting to the IRS is 2 to 4% net profit. And there's been many, many years where that's all we report. Doesn't mean we didn't, everything got paid and everyone got bonuses, stuff like that. I get that, but we're looking to show more than that at the end of the year. A good problem to have is to have to pay taxes. Very good problem to have. So if you're this national average, I'm going to tell you, you're struggling. Like, that is unacceptable. You can't be 293 average invoice. It needs to be higher than that. The minimum cost when they did this survey was $75, and the maximum cost is $2,900. Average range, huge average here, 144 to 451. I can tell you, the people who are 144 to 350, well, let's say 144 to 300, those companies are going to be struggling compared to other companies that charge above the 300 or average above the 300 for an average hourly or average repair cost. Um, so think about this, guys. I mean, I'm telling you, it needs to be higher. You need that should be a focus. One of the primary numbers, if there was anything that I would tell you to track, is to make sure you know what your average invoice is and always be trying to increase it, always. And separate those. Don't take your average invoice from your installs and your service. If you're going back and forth, like one day you got a guy doing service, the next day he's working on an install. That's normal in smaller companies, perfectly normal, but separate them. Just because he did that $10,000 install and then did 20 calls that he collected $75 on, don't mix them and show that his average invoice is, $1,000 or something. Keep them separate. What's the repair? What's the repair, service, maintenance average invoice? What's the average invoice of installation? How to build your task list when you determine your hourly rate. So I just want to throw this in here real quick is once you know what your hourly rate's going to be, and I can tell you that we just saw that slide where it shows you what the average is, which is huge range. Huge range. You've got the top companies that are doing way better, and they can fund the growth and pay their people what they deserve, and they're in more fair exchange than these companies charging $144 for an hourly rate. Like those companies are struggling, promise you. There's a book that I want you to read, and I'm going to recommend some other books at the end of this, but one of the books is On the Shoulders of Giants by Jack Welch. He's the one who created Nexstar, which is a best practices coaching organization. I'm not in Nexstar. I'm not speaking on their behalf or anything, but I'm telling you, that's a really great book. So go get that book, and he's going to tell you that one guy in one truck working out of your home should be no less than $375 per hour is what you should be charging. So you're not charging unless you're doing like a 1 hour minimum, which you might get some resistance with customers on that. And you're not going to be able to sell that over the phone. I have a 1 hour minimum. It's $375. That's going to be really hard. But this example, I just did $200 per hour and with a $75 diagnostic. So if I was there for 60 minutes, well, $200 per hour divided by 60, that's $3.33 a minute. So if I had an hour-long task, I'm sorry, a half-hour task, you just divide that in two. It's $100 for a half hour. Now, I'm not going to communicate to the customer. It's going to be wrapped up in my flat rate pricing. That's the reason for flat rate pricing too, is because you're going to get a lot of resistance if customers knew what we had to make just to pay our people what they deserve and to have benefits and have dispatch software and training and just everything it costs to run the business, the insurance, the phones. If they knew how much it cost, they're never going to understand it ever. So it's easier to wrap it up into a flat rate price. That way you're getting what you need to survive and earn a profit, versus telling them it's $375 an hour. You're always going to meet with the resistance, and people are going to say things like, "Oh, I'm in the wrong business. That's ridiculous. How can you, that's highway robbery, blah, blah, blah." Like they're going to complain. I understand, but it's just reality. So let's wake up and face reality. This is what it costs to run a business. Stop pretending that it costs less. So if I did a task that took 20 minutes, I would take $3.33 times 20 minutes times 20. That's going to give me $66. So if, it'd be $75 diagnostic plus a $66 fee just to cover my overhead expenses and my labor, for instance, if I know that I'm $200 per hour. I've talked about incremental raises. There's some ways you can do it to incrementally raise your rates to feel better about it and sleep better about it at night if you need to. Elastic and inelastic pricing. In Kansas, we crush it 4 months out of the year, May through August. Typically, this summer sucked. Summer didn't really get here until June and ended about 1 week into August. After that, we had just random days where it was a little bit warmer. We earned the biggest percentage of our yearly revenue during those months. 2019, right about 50% of our entire income for the year came from only 4 months. And it's that right there, which is another reason why we have to charge what we charge. It's unfortunate that we can't stay that busy all year long. If we could charge less. We could charge less money for our services, but the reality is we have seasons. This is a hard thing to swallow, but I had to throw it in there. And I talked about it earlier. The customer pays for everything. Everything. In every single business that exists, the customer pays for everything. It's just a reality. Accept it, swallow it, whatever. It was a tough thing for me to accept, but it's true. Instead, what we tend to do when I talked about raising your rates, we have this confirmation bias. Like, oh, well, if I raise my rates, everybody's going to complain. I'm going to get phone calls. Well, guess what? Here's what happens in our minds. What confirmation bias says is that it's the tendency to interpret new evidence as confirmation of one's existing beliefs or theories. So you're going to go out with these new prices and somebody's going to complain. You're going to say, yep, I knew it. I'm going to lose all my customers. Like, this is the end. I can't even do this. No, you're just allowing that one complaint to tie into what your existing beliefs were. And that's called confirmation bias. So stay away from this. Just keep going. Keep going. You're going to find that the couple of people that complain from raising your rates will go away. And the majority of your customers will not complain. And if they do, they'll go away and you'll gain new customers because you're putting more value on yourself and you're more in fair exchange with your customer because, that's part of the reason how we can, it can help us to, that's part of how it helps us justify our cost is knowing that, hey, we're going to get new uniforms. We're going to get nicer vehicles. We're going to train our people better, and we're going to get dispatch software, and we're going to do all these things to up our value. And it helps us as contractors understand or accept that we do have to charge these higher rates. Once you understand this, my goal by the end of this, which we're almost done, is for you to understand that you can justify your price. Understand that the other way is not working. If you're not making money, it's not working. So we have to change in order to get a different result. But this confirmation bias, whatever you look for, you're going to find. So if you think this is all it's going to create is a bunch of headache and concern and worry and fear and anxiety and less sales, then you're going to find that because what you look for, you find always. So instead, change your mindset. I'm going to serve this customer at the highest level. It is going to cost more and they're going to appreciate it. People like me, people buy from me. People like me, people buy from me, right? Like you've got to rewire your brain. You've got to change your way of thinking. And once you start looking for that, once I start looking for people like me and they buy from me, that's what I'm going to find because that's what I'm looking for. So Ellen Rohr, she's kind of a guru in this. I definitely recommend checking her out. Here's a couple of her books. How Much Should I Charge? Pricing Basics for Making Money Doing What You Love. And Where Did the Money Go? Get those 2 books. Invest in Ellen. She's got a bunch of other things. She's a powerhouse rock star. So I just love Ellen. I always recommend her. Another books, some of the resources that for this presentation were Small Business Cash Flow, Double Your Profits in 6 months or less, and The Power of Positive Pricing. How Much Is Your Pricing Costing You by Matt Mitchell. All of these books, this one, Double Your Profits, you could get that on Audible. I do not recommend getting these other books on Audible or Ellen's books on Audible because they've got graphs and charts and you need to be looking at those to help you understand them. There's also another resource called Black Belt Contracting where they have a shared flat rate book, but it's going to be a really big, long book with different repairs for all these. I don't necessarily recommend going that route, but it is there as a reference for you. So that's it, guys. Hope you enjoyed this. I hope you will continue growing your education, growing yourself, and building your business, because it doesn't have to be what it is right now. It can change. It can get better, and but you've got to change yourself. So anyhow, guys, brought to you by Market Today, markettoday.com. Go check them out. Start with the new website. I'll see you guys later. Have a great weekend and go make money.